Good morning, everybody. It's Thursday, November 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn unchanged at 426 and a quarter. January soybeans were up 10 at 1013 and 3/4, and December Chicago wheat was up a penny at 574 and a quarter. This morning, we had an export sales announcement from the USDA of 120,000 metric tons of corn to unknown destinations for 24. Also out were weekly export sales. A good solid week for corn and soybeans. Corn came back at 2,766,500. That was above the upper end of the estimates. They were looking for 2.5 at the top end. Soybeans came back a little over 2 million to 2,037,200. Upper end of the range there was 2.2 million. So real good week in the bean complex. Wheat sales kind of lower end of the range, 374,700. Meal was right in the middle, pretty solid, 398,600. And bean oil was real solid at 114,300. Upper end of the range was for 50. Good morning, guys. We've got a lot to go through here. We got a Fed announcement today. By all accounts, they're looking for another quarter point cut, and then obviously, then the meeting afterwards is always very important to see what the guidance looks like. Also, tomorrow morning we're going to have a USDA report. So a lot of things here still left to wrap up the week. Dustin, maybe a few thoughts as we get rolling, and then we'll kick it around the room.
Yeah, thanks, Dan. Obviously, a very positive response post-election results yesterday, despite the early sell-off. And, we're seeing this continue again, overnight, mainly in let's say no 25 beans up another 5.25 cents. And you look at things like the Real is up again. Real has staged a really big turnaround after yesterday, early morning lows to where we are today. And so I think it's just some positive momentum behind this market. And, we also have, I think, some technical things happening in corn. We're in a bit of a breakout. So I'd be curious to see what the volume does today. Yesterday, in the overnight session, there was heavy volume. But, when you're looking at, large position holders looking for liquidity, I think the day session is really what you want to watch to see where we end up, see what, when you're trading size and positioning, especially, I think that a lot of those moves are better to be watched during the day session. So I'd be curious to see today for direction.
Sure. Justin, having had a day to kind of digest a little bit of everything that happened with the election and everything, what's on your mind?
Yeah, I think as Dustin said that, obviously really strong outside markets yesterday. I don't know if I've seen a stock market that rallied that hard and stayed, kept that strength sustained throughout the day. So I think that was very impressive. I think that kind of adds to the thought of, that there's a lot of money on sidelines, that was just coming in, starting to come in. So I don't think that's going to be a one-off here. If the market decides that's a trend, I think money will continue to get placed here now that we're past the election. It looks like Republicans will get all three branches. We still got to obviously get the House for sure, but yeah. So I think we saw that. We talked about it yesterday, but I think grains. I think the knee-jerk reaction was it's going to be really bearish because of tariffs, but we talked through that yesterday. A lot of tariffs are still in place, and it could be a very friendly thing. So still a lot to be determined there. It's encouraging to see these kind of sales. We had sales going into it, which we talked about. So was that just getting coverage at relatively cheap prices, ahead of the election? Was there some front loading there by Mexico, for example, with corn? I don't know the answer to that. But either way, we are selling, a lot of our different products. Oil, for instance, that Dan talked about. It's, a dozen or so countries that bought oil, and we've been not priced for oil exports because of our huge renewable diesel program. So palm oil, rolled veg oils took off. We became one of the cheapest oils. So we found some really good demand here, and I'm not a demand bear in our markets. We obviously have a USDA report, see if they raise or lower yields, 1 or 2. It could be kind of a turning point if they were to lower them. I would say if yields were to come in a couple bushels smaller, I think that would snug things up enough in this environment and at these price levels where it'd be hard to argue for, to go take out the lows by any kind of a large margin, in my opinion.
Yeah. Do you think, Justin, any adjustments, based on this strong demand? I mean, do you think they'll make any demand side adjustments coming up here in this report?
Certainly not for, I wouldn't think so for beans because they have very large numbers written down. Maybe corn. Corn's well ahead of, any kind of a recent pace or 5-year pace. So I would see the argument that you could start raising corn exports. I think beans have too far to go for the size of numbers that they've written down personally. So I think your best bet on beans right now, unless we start seeing, a phase 2 type China purchases thing later and, next year, at today's date, unless you guys disagree, I don't see a big reason to raise bean exports. I think you're going to have probably production come down to snug up the bean balance sheet right now. Crush has been record, but we have really big numbers written down. So you would need, I think, to see a couple bushel decrease on bean yields.
So it's, I know there's some interesting things that, and it's all based on personalized, our approach is based on, individual operations and their scenarios, but just like as a whole, our industry, I was having this conversation yesterday, you look at new crop corn and bean prices and there's nothing overly exciting based on cost structures. And we've talked about it a number of times to really, dig your heels in the sand and make a strong point to do much. Have you seen a year where it's just kind of like we got to kind of see how some things play out before we really get overly aggressive?
Well, it's again, I think we've covered this a lot of times on the show, but it's one thing, and I've always been a big advocate of, the market doesn't care what it costs you to grow corn. And that's true in a short-term scenario. Take last year, for example, if you paid record high inputs, but then you planted the crop, after that doesn't matter. Crop's been planted, right? So in the short run, market doesn't care what it costs you. Over a longer period of time, it is a problem, right? When you start to get a majority of producers underwater, when you start to get, multiple countries producers, in this case, look at, ourselves in South America, by a lot of metrics, we're both underwater. So that's where you start to get, a blow of cost of production on a meaningful level. And with sticky inflation, it starts to, how does that start to change the way people put down insecticides and fertilizer and start cutting back on, anything they can to save some dollars. Maybe they plant crops that they wouldn't normally plant for rotational needs to lower the cost. So you just don't act as, when you go from trying to grow the biggest crop to trying to survive, it just has different outcomes, especially on a big scale. So that's why that matters. Again, it can go longer and more painful than any of us would like. We saw this in the last time Trump was president. We were below cost of production many of those years because of a trade war, but there was big subsidies that offset that, right? So those are your really two kind of things. If you want to keep it really low for some reason, to not let it work itself out, then is there subsidies or something? That's not ideal for anybody. I think ideally you'd work out some kind of a deal where we use more and more of our product. I think I'm hoping that we slash these giant loopholes of billions of pounds of used cooking oil and things that are coming in that U.S. taxpayers are paying for foreign product. I think if we could shore up some of those things, and I think we could have a really good demand-led U.S.-based market without having to rely, hugely on exports. And then exports would be a kicker. So you can write some scenarios where we fix some just relatively easy loopholes and, really build a lot of demand here at these levels. So.
And Dustin, looks like you had something to add there.
Yeah, I just wanted to reiterate too, like when you have structural inflation, when you lose 25% of the dollar's purchasing power over a 5-year period, we can't go back and be like, oh, we'll find a way to make money at sub $4 cash corn again. I don't think that's so easily done. We're so spoiled having a stable dollar for the last 30 years and not having near double-digit inflation. but the loose monetary and fiscal policies have come home to roost. And I think that we still believe that it's going to be very hard to get cost production down. And at the end of the day, like, demand still wants this. It's clear right now, demand is coming in at these prices. And when we look at like global stocks, corn stocks, wheat stocks, we've kind of beaten a dead horse with this, but I think we have to just remind ourselves we're not working in the same playing field we were in 2018, 2019. We're in a completely different ballpark. And we don't want to get ahead of ourselves and say, oh, well, 450 corn is traditionally a good price, and I'll make that number work. And there's a lot of arguments that, well, no, look at our new yields. We're at a new trend line yield. It's not 25% higher, right? We're still a ways away from making these yields work at the new cost production that we're all experiencing. So I think I just kind of keep that in mind and not get overzealous on, what happened in the last 12 months, 18 months of bear markets, and getting lulled into that. Well, that's just going to be the next 18 months. It's just going to continue to be weak. It could be. I don't think that I'm going to go out and overreact right now when we have some of these protections in place. Like PLC is fairly close to the market next year. So just to be mindful of that and mindful of the dollar is all I wanted to mention to go along with that conversation.
I think it's very good. Any other thoughts here, guys, on the grain side?
Yeah, I'm just going to bring up, Dan. The latest drought monitor came out. Welcome rain through the corn belt here, so that has improved dramatically. Another system coming through in the next 72 hours through the wheat belt, so definitely improving the Mississippi here. I saw freight actually dropping on the Mississippi, so it's getting a reprieve here. And then we have another hurricane. I think it's Raphael is brewing. Yeah, it's coming through Cuba, so we don't know exactly where the direction is yet when it enters the Gulf, but early indications that it's coming through Louisiana and going up north. So. Yeah, so yeah, we'll see how that all plays out though, but definitely a reprieve, get some fall applications down, which is helping out a lot of guys.
Yeah, I'd say, this seems to me, I mean, this has been one of the most active hurricane years I can remember in quite some time. I mean, this has been pretty crazy this year so far.
Well, I think it was one of the slowest, and then it just got really active at the end. So
is that what it was?
It feels like to me, like
recency bias.
Thought we were going to be done with the hurricane season, then all of a sudden it just ramped up. So
yeah, it's crazy. Well, the Louisiana ones get pretty gnarly when you start talking crude and shipments and oil and all that kind of stuff. So certainly something to keep an eye on. Thanks, Brian. That was appreciate the input there. Rylan, quickly before we come into the open, good start for cattle yesterday. Hogs recovered a little bit. What's your thoughts as we start the day?
Yeah, it was kind of good price action to start yesterday. Just kind of everybody was whooped up kind of coming into the day and then just started to kind of peter out as we moved forward here. So I think just the cash sentiment right now, especially just being on a little bit of a break here, is starting to soften up a little bit, but we'll see. Yesterday we saw bids of the FCE around 185 and offers at 190. So it seems like Packers may be a little bit more reluctant to pay 190. Otherwise, they're going to try to just kind of not show their hand so soon in the week, which is not a great sign. It just seems like that demand's starting to maybe ease back a little bit, or maybe they're just being a little bit more margin cautious. So overall, it just seems like the indication right now is just kind of steady, maybe even a little softer, especially in the north. So we'll see how that goes. There wasn't really too much of a change in open interest, maybe a little bit of liquidation just after the rally. But overall, just seems like trend softening, but we're still at elevated prices. So I think overall it could kind of go either way at this point, just really cash dependent. And if beef prices are going to find some support here, we did see box beef and the choice down 162 yesterday. So I think that kind of helps support that sentiment that we could see a little bit of lower on the cash side of things. Exports came in at a marketing year low. So we're starting to see just some kind of weaker news. So wouldn't be surprised to see just a little bit of uneasiness on the board, but we have already kind of priced in some lower cash. So we'll see if that really kind of filters in on the hog side. You had a really disappointing export report on the sales side of things. It was a net reduction of 14,700 metric tons. So I think that's not going to be good for the price action to start this morning, just considering we've been kind of pumping this demand-led narrative right now amid a tighter supply of hogs. So I would imagine that that's going to probably cause a little bit of caution to start here. So we'll see how it all shapes up. But at this point, bellies were on a big rally yesterday, and we were up $6.20. So there may find some support. Otherwise, feels like we're starting to see a little bit of kind of caution here.
Appreciate the update. Just came into the open here. We got December corn down $0.0125 at $4.25. January soybeans are up 8 at 10.11 3/4, and December Chicago wheat is down 2 1/4, 2.5 now at 5.70 1/2. Once again, we will have USDA report out tomorrow morning at 11 o'clock Central. We will have a bonus war room edition at 11:15 to give our thoughts and opinions there and wrap up the week. So be sure to tune in 11:15 Central for the bonus war room tomorrow morning. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Doesn't cost you anything to do so. And certainly it'll keep you up to speed on everything AgYield. So once again, thanks to everybody that supports the show and tunes in every morning. We are doing this every day that the markets are open. We're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments there, guys, this morning. It was a good show. I hope everybody has a great day, and we look forward to talking again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.